Good morning and welcome to another edition of the OFX Currency Corner. Having made 11-month lows last week, the Australian dollar touched levels at the 74.15 mark, however rebounded strongly into the close, moving back above the 75-cent handle as investors look to consolidate positions and take profit against the US dollar's recent advance. The US dollar appreciation over the last month seemingly shifted pace as we've seen a change in Fed speak. We've seen reductions in CPI and labour market data, as well as an improvement across risk appetite trends, and that's led to the Australian dollar holding on to those levels and refraining, or we've seen a refrain from investors pushing that bearish downturn into a new range between sort of 72.80 and 74 cents. Looking forward now, we watched the RBA minutes this morning as well as commentary from Governor DeBell, and while we expect minimal changes from the RBA's recent mandate and commentary, this will be keenly watched to see if we do see any updates on inflation and interest rate expectations moving into the second half of 2018. Perhaps of more importance on immediate direction for the Australian dollar will be Chinese industrial production numbers. They're a relatively stable print and they could indicate an uptick in demand for Australian key commodities and help push the Australian dollar beyond resistance at 75.60. Tomorrow's wage price numbers as well are a key marker for governing short-term direction for the Australian dollar as well, as they're a good front runner for consumer spending, retail sales and in turn inflation expectations. Finally, Friday's US retail sales print will be a good marker for Q2 GDP numbers, and with bullish expectations there, a strong read in Friday's print could help the US dollar maintain this momentum and force the Australian dollar back below that 75-cent handle. We expect broader ranges between 74 and 76, but for more direction, contact our teams.